look if we get the bigger $2 trillion spending package. Of course, this also would come at a time when we have probably more volatility, given that the stopgap funding measure will run out around December.
So the bigger stimulus package, ironically, won't have that big of an impact on near-term inflation. It's for the most part funded with tax increases. So if anything, it could close the deficit a little earlier because those taxes will come in earlier than the money will actually be spent. But more importantly, it's over a 10-year period, whereas we're dealing with, like Fed President Daly said, COVID-related issues, and we'll know within the next 2 to 3 quarters how much of these shortages and supply chain issues remain, and hopefully by then we'll be looking at COVID in the rearview mirror.
There's been a lot of speculation about the reappointment of Fed Chair Powell, with the Fed Governor Brainard also talking to President Biden. What are your expectations on this front? And if we do see a change at the helm of the Fed, will that have a meaningful impact on Fed policy?
You know what? I still think Powell is going to be reappointed. I think it makes sense. I think there's enough things going on with regard to Fed policy and inflation that continuity makes sense. It's really maybe the more progressive part of the congressional wing that is pushing Lael Brainard a little bit harder. There are ways around it, possibly having her get more involved in bank supervision. Having said that, I think that if we're looking at the inflation numbers that don't really back off the way every Fed member is saying that they expect it to back off, for the most part, I don't think there's much policy choice for them to make. They still are going to be guided by the mandates. They're dual mandates, and if those prices are unstable, while the jobs market is improving and continues to show gains, the Fed's hands are really somewhat tied in terms of what it should do next.
If you drill into those U.S. inflation numbers, we see some pretty good big gains for gasoline prices, fuel oil as well. When do you see those pressures starting to ease?
Yeah, I mean, certainly we're seeing the energy prices stabilize a little bit more. The way I kind of look at the bigger contributors to this month's gain, it's been shelter, it's been energy, and it's been food, which has been accelerating. So each one of those is a tax on the consumer. Most Americans need to put gas in their car. They obviously need to put food on their table, and they have to pay their rent. If those numbers keep increasing, it will have an impact on other parts of the consumer discussion. And again, once hopefully we get past these COVID shortage issues, we'll be able to see how that consumption demand starts to affect prices that look a little bit more normal. But I would expect some of the energy prices to start to stabilize as we go into the beginning of next year, after maybe the heavier travel that occurs during the holidays here.
Marvin Lowe, it was great having you on as always. Senior
you.
Global Macro Strategist at State Street. Thank you. You can get a roundup of the stories that you need to know to get your day going in today's edition of Daybreak. Bloomberg subscribers, go to Go on your terminals, also available on mobile in the Bloomberg Anywhere app. You can customize your settings so you only get the news on the industries and the assets that you care about. This is Bloomberg.
As we watch Carol slowly change color, seems like a great time to talk trading. Because it's as true with the markets as it is with anything. If you want to do big things, you need better tools. Trade up to IC Markets.
A quick check of the latest business flash headlines. General Electric is offering to buy back up to $23 billion of bonds in one of the largest corporate debt buybacks ever. It's targeting a series of bonds maturing through to 2050. The company is on track to cut $75 billion of debt in 3 years to boost cash flow and profit margins. That's as it pursues a massive restructure, splitting it into 3 businesses focused on health, aviation, and energy. Credit Suisse and UBS have stopped accepting the bonds of a growing number of Chinese developers as collateral for margin loans. Sources tell us private banking clients can no longer use dollar debt issued by China Evergrande, Kaisa Group, and Fantasia Holdings. Evergrande's financial stress has spread through the industry, triggering bond losses at both junk-rated and higher-grade borrowers. Almost a quarter of financial services firms are planning to cut their workforces in New York in the next 5 years. Let's get the details from Bloomberg's Sally Bakewell. Sally, we thought this was only due to the pandemic, but what happens to New York City as a financial hub?
Yeah, that's right. Some 22%, or about a quarter of financial services firms, anticipate a reduction in jobs in New York City, and that makes financial services the industry with the greatest losses. Now, the reasons are likely a few. Wall Street has been moving staff and offices to lower-cost locations like Florida and Texas. If you look at Goldman Sachs, for example, it's been on the hunt for a new Dallas area campus that could be its biggest in the U.S. outside Manhattan. And others like Vanguard and Charles Schwab have also got plans. Banks have also been emphasizing automation and technology that would enable them to cut staff. And if you look at the industry more broadly, this is no new cry. Banking analysts and industry watchers have been saying for a while that the era of bankers dominating banking is drawing to a close. And in fact, Wells Fargo analyst Mike Mayo, a very prominent analyst, he's predicted in September that technology improvements and automation could allow the industry more broadly, so not just in New York, to cut 100,000 jobs over the next 5 years.
So, Sally, that's the banks. What are the implications for commercial real estate around the area and all those ancillary businesses that are in that area as well?
Yeah, it certainly has knock-on effects to those areas where people are obviously going out to get their lunch and other services. What the banks would say is that spending more on technology, and they spend more on technology than any other industry, that extra spending is supposed to help drive down costs. So while it might be bad for job prospects, it could help profitability at the bank and make things cheaper for consumers. But indeed, if you think about the ecosystems around these offices, if their office space is reduced, which is also what is expected, you can anticipate some knock-on impacts there. And, added into all of this are the pressures on compensation that banks have talked about in their earnings, and wage inflation. So it all adds up to probably this preference to trim workforce where they can.
All right, Bloomberg's America's finance editor, Sally Bakewell there. Blue Owl Capital has emerged as one of the fastest growing and most disruptive players in private markets, boasting $70 billion in assets. Co-founders and co-presidents Michael Rees and Mark Lipschultz explain their business model in an exclusive conversation with Eric Schatzker on Bloomberg's Front Row.
We perhaps fancy ourselves a bit like Silicon Valley, but really it's that we've modeled our business after Silicon Valley, which is to say those disruptors, what did they really do? What they did is they identified a large market that wasn't being fully or properly served, said, here, I'm going to provide a superior solution. We manage primarily permanent capital. 97% of our revenue comes from permanent capital vehicles. So we have an entirely different offering to the users of capital, which is we can provide different kinds of duration and different structures from anybody else. And so we said there is a chance to be that disruptor. And then we purposely built a business model that looked a whole lot more like a tech company than financial services. We didn't start and say, our base model is a bank. Now, how do we become a better bank? We started by saying, here's a necessary service. And if we can do a great job delivering that product, we can earn really attractive risk-adjusted returns. And our business attributes, and this is, I think, a really important point from the point of view of Blue Owl or our shareholders, we look a whole lot like a SaaS business. And people don't normally map technology or Silicon Valley to Wall Street, but we've done this pretty consciously.
Yeah, and our businesses are set up to deliver to our end user and our clients a certain set of services. But if you held our income statement against any other SaaS company, you'd be surprised how similar they are. High growth, recurring revenue, high margin. Hard to tell the difference.
Blue Owl co-founders Michael Rees and Mark Lipschultz speaking on Bloomberg's Front Row. And this is a picture across currency markets right now. Of course, we saw the Japanese yen really falling and snapping that 4 days of gains against the U.S. dollar. We saw a little bit of risk on sentiment, but still around that 1-month high, returning to that 112 and 114 range, really holding at around those levels as we continue to see really yields rise in the U.S. and the dollar also jump higher. We are going to see how that's going to impact the stock markets as we come back from this break. Plenty more to come. This is Bloomberg.
As we watch Tony tire himself out, seems like a great time to talk trading. Because it's as true with the markets as it is with anything. If you want to do big things, you need better tools. Trade up to IC markets.
I'm Sue Keenan, and we're tracking the fallout of the global supply chain clutch, I should say. These are the top stories today. U.S. President Joe Biden touted the fallout, I should say, touted the soon-to-be-signed infrastructure bill in his trip to the Port of Baltimore, saying it's part of the plan to return the economy to normal. The visit intends to highlight upgrades to the port, which is marketing itself to some of the world's largest container vessels. We're also watching how the crunch is impacting earnings. Now, we heard from Disney earlier, whose CFO sees supply chain impact on its auto and tech ads. The effect was more pronounced on Beyond Meat's business. The company's share price tanked after its outlook showed the growth streak is ending. It blamed much of its woes on supply snags and labor shortages. And Bloomberg terminal users can read more about these stories in our newsletter, Supply Lines. That's on NI Trade NL. Back to you.
Thanks, Sue. Rivian Automotive raised about $11.9 billion after investors piled into the biggest trading debut of this year. CEO Ajay Sakaranch told Bloomberg how the company plans to use the proceeds from the upsized IPO.
We have to electrify that entire fleet. We have to replace, well in excess of 1 billion vehicles, gasoline and combustion-powered vehicles, with electric vehicles. The scale of this is just, it's in some ways unimaginably large. And it's going to require multiple companies to be building multiple products, portfolios of products that capture addressable market in different form factors, different segments. And for us, we're very focused on that. So what we're, what we're looking at today is our launch products, but making sure we have the capital to continue scaling the business, building additional production capacity for future products, continuing the development of those future products along with the technologies is really key. And we are really striving to help drive and lead this massive transition that we're going to have to see over the next.
It's reported you're in talks with the city of Fort Worth to invest $5 billion in a plant there. You're looking at potential sites for a plant in Europe, potentially the UK. What's the update on those, please?
We haven't made any announcements around our second or third facilities. There's certainly a lot of speculation, but these are really important decisions. And for us, it really comes down to looking at the ability to recruit an outstanding team to come in and help drive and operate these facilities. So looking at the pool of talent that exists in each of these locations, these potential locations, as well as, of course, access to the supply chain. So where our suppliers are and what the logistics looks like to bring components in.
On the supply chain, you delayed the start of production on the R1T more than once. You talked about a shortage of semiconductors. Where are the pressure points? Is it in semiconductors, rising commodity costs, labor? Where are you seeing the choke points?
I would say the biggest challenge that we have, and I would say broadly across many industries, is really the health of the supply chain. And if you think about building a vehicle like this, like our R1T, there's around 2,000 parts that come in from end item parts that come from suppliers. And This is one of those rare situations where a 99.5% is not good enough, meaning if 99.5% of the supply chain is ramping at the same rate of our production, but 0.5% isn't, that of course creates a constraint or a throttle for how fast we can ramp the rest of the facility. And that's certainly the world that we're living in, along with many others, of managing what is actually a small number of suppliers, but working really closely with them, partnering with those organizations to make sure they can keep up with our ramp. And that is a major focus for our team. And we're fortunate to have some great folks that are on the ground working with those suppliers, making sure we get through this ramp phase.
Previous CEO and founder RJ Scaringe talking to Bloomberg's Ed Ludlow. Take a look at Tesla shares right now after hours, gaining about 2%. This after Elon Musk filed a Form 4, and we found out that he sold shares to satisfy taxes from options. Remember, he's just months out from a deadline to exercise the stock options that he received years ago. And if he doesn't use them, he would lose them. And if he does exercise his shares, he's going to face a big tax bill. So either way, he would have to sell a big chunk of his shares. We had seen Musk on Saturday polling Twitter users on whether he should sell 10% of his stake in his company. The poll appeared to be a response to that Democratic proposal to tax the unrealized gains of billionaires. But of course, we do know that he's facing a big tax bill as he must be exercising those stock options that he received years ago. Elon Musk exercised 2,154,572 options at $6.24, according to that Form 4 filing. Right, let's turn to China. Its year-long crackdown on the tech industry is taking a heavy toll on its most valuable company, Tencent. The gaming, social media, and fintech giant has posted its slowest pace of revenue growth since the company went public 17 years ago. For more, let's bring in our Chief North Asia correspondent, Stephen Engel, in Hong Kong. Steve, so what stood out for you?
Well, obviously, we've been 1 year into this regulatory crackdown on all big tech, not just Tencent, but Alibaba and others. That is the big overhang of pressure, but it's really impacting advertising sales. And Tencent admits that pricing power for advertising will remain soft for several more quarters. It's affecting industries that have been hit by these regulatory actions, whether it is gaming, whether it is insurance, or whether it is obviously education, which Tencent has a big interest in. So that is going to weigh on, ad revenue. This on top of, gaming operations have been hit by a moratorium on approvals for new games that's been in place since July. The company says that's likely to be temporary until the regulatory environment eases. But again, we don't know how long the regulatory environment will stay stiff as it is. Bloomberg Intelligence says with the economic situation in China worsening, we expect more ad pressure in the fourth quarter and beyond into 2022. So 13% overall gain in revenue. That was the slowest pace of revenue growth that we've seen for this once juggernaut, China's most valuable company, the slowest pace of growth since 2004. I remember sitting here in this studio or somewhere here in the Bloomberg building talking about that IPO. It's come a long way, obviously, but hitting some stiff headwinds right now.
Your revenue growth slowing, Steve, but Tencent's still got a pretty healthy balance sheet. How long is this pressure likely to last?
Yeah, I mean, again, I've said how long is a piece of string because we simply don't know how long this regulatory pressure is going to last, whether they're going to ease up on it now that it's been a 1 year long. In the gaming business, as I said, Tencent feels that these regulatory pressures could be temporary, but they did say, in the past, Martin Lau, the president, and other executives have said compliance to the regulatory changes is their lifeblood, their lifeline, really. But they do have, the bread and butter games like Honor of Kings, League of Legends Mobile launching in China. They have this big, very successful e-games tournament. So the gaming side has a good pipeline still to come. Once again, those regulatory approvals for new games gets lifted. They had a similar situation back in 2018. They came out of that fairly strong. But the big uncertainties are on the bigger part of the business, fintech business and WeChat. What's going to happen to their regulation on that as far as being regulated like a bank rather than a freewheeling fintech? What's going to happen to their data security? We all know that perhaps data is going to be nationalized and folded into a company with oversight by the government. That's a big proprietary chunk of their business and affects their cloud business as well. And again, fintech and openness of the platforms. Platforms are, being ordered essentially to allow others to search WeChat platforms and the like. So that benefits Baidu, but to the detriment of a company like Tencent.
All right, Chief North Asia correspondent Stephen Engel there on Tencent. Let's get to Vonnie Quinn now for the first word headlines. Vonnie.
Paul, thank you. China Evergrande looks set to avert another default in its biggest debt test since the liquidity crisis began. International clearing firm Clearstream says its customers have received overdue interest on $3 bonds. Two investors that hold two of the bonds also confirmed they received the funds. Evergrande needed to make $148 million in coupon payments by Wednesday before the end of 30-day grace periods. U.S. consumer prices rose at the fastest pace in October in 3 decades, gaining more than 6% on the year. Higher costs for energy, shelter, food, and vehicles fueled the reading. Leading economists predict even bigger jumps in the coming months. This puts pressure on Fed officials to end near-zero interest rates sooner than expected. They could also quicken the pace of the bond buying taper. China and the U.S. say they'll work together to slow global warming, issuing a surprise joint statement that injects new momentum into the last days of COP26 climate negotiations. Two nations agreed to boost their efforts to cut emissions, including by tackling methane and illegal deforestation. They plan a working group to meet in the first half of next year, focusing on faster action this decade.
The United States and China have no shortage of differences, but on climate, cooperation is the only way to get this job done. This is not a discretionary thing, frankly. This is science. It's math and physics that dictate the road that we have to travel.
Johnson & Johnson will have its baby powder bankruptcy moved to its home state of New Jersey. Transfer will test a plan known as Texas Two-Step. J&J created a unit in Texas to hold all of the lawsuits claiming its products caused cancer. It then moved the unit to North Carolina and placed it in insolvency. Strategy has not yet been tried in New Jersey's federal bankruptcy court. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Vonnie Quinn. This is Bloomberg.
Right, Vonnie, this is how Asian markets are trading. Early in the session, we are seeing downside pressure for the ASX 200, with the energy sector and tech leading the declines. Not surprising, we had oil falling in the New York session, although we're seeing a little bit of a rebound right now, not to mention the concerns of valuation have really pushed down tech. We are seeing Kiwi stocks at the moment rebounding slightly from those losses that we saw in the previous session. Nikkei futures down and really extending those losses that we saw in the previous 4 sessions. We'll watch what the open looks like, but in the meantime, U.S. futures unchanged after stocks fell by the most in a month. Right, up next in our Bloomberg Wealth segment, we'll hear from GGV Capital managing partner Hans Tang shares how to look for and apply patterns for long-term investing. This is Bloomberg. It's time now for Bloomberg Wealth.
As we watch Nico not quite cutting it, seems like a great time to talk trading. Because it's as true with the markets as it is with anything. If you want to do big things, you need better tools. Trade up to IC markets,
where we discuss strategies for long-term investing. Our next guest is in VC at GGV Capital, which has more than $9 billion under management. He focuses on early-stage opportunities with a portfolio including 18 unicorns. Let's bring in GGV Capital managing partner Hans Tang. Hans, great to have you with us. So you've been named to Forbes Midas List 9 consecutive years. Tell us about your long-term strategy for investing in successful companies.
It's pretty simple. For me, it's just bet on people, betting founders who are game changers. They're about to do things that are fast digitizing the offline economy to bring them to online. Invest in sectors that are have an inflection point that have huge growth ahead, and then ultimately companies that we think has a cross-border or if not global potential. Some of those examples include in the U.S. Airbnb, Slack, Peloton, Affirm, and in China, Xiaomi, Meituan Dianping, and Little Red Book. In Southeast Asia, my partner led our investment in Grab in Series B back in 2014. And in India, I have 5 other investments that we invest, many of them at early stage, and they're growing well.
All of those companies that you mentioned really have boomed in the past few years, right? And digitization, technology is such a fast-changing space. How do you keep up with the latest trends?
Yeah, we look at countries and sectors that we think are poised to grow fast. So when I first started investing, it was fascinating to see how traditional media is being impacted by digital media. It was fascinating seeing how retail is being affected by e-commerce, by people shopping online. And we doubled down on those areas in both the US and China. And over the years, you start seeing other sectors opening up, whether it's education, whether it's fintech, and then during the pandemic, healthcare, and just as more sectors open up, as more smartphone penetration rate increases in many of these markets, you start seeing more and more opportunities from B2C to B2B, and it just start seeing more things. And by now, we have such a good brand across the board in many of these countries and continents that we have a lot of inbound of interest, people who want to talk to us. And so we can share our knowledge of the same sector across different geographies with these funders. So that gives us some more signals than other people to choose the best investments from.
I wonder if you're closely looking at innovations like blockchain, crypto, and NFTs, or is that all looking a little bit 90s .com bubble to you at the moment?
Great question. That's the billion-dollar question right now. We are a small investor in Coinbase. We invested in late 2016, more as an experiment to see how the sector will go. Obviously, they have done extremely well since. And when you see there's a lot of volatility around the world and instability, it makes it easier for consumers, especially Gen Z and Gen Y users, to put more money into crypto as a way to store value and see value appreciate. And so we feel that there is a need for investments, for sure, investment diversification. So there'll be more money going to crypto for that. But fundamentally, we also see that crypto as a way to make transaction much more efficient, have this decentralized finance that makes the economy go smoother over time. But right now, there definitely is a lot more hype than there are actual end user adoption on the usage side. So it's still early, but it's definitely a sector we're watching and following. And over time, it could be follow the way of internet. And we all remember back in 94, 95, 96, 97, internet is this huge bubble. It lasted 7 years before the bubble bursted. But afterwards, it actually was the best time to be in the internet world and start investing in building companies that will be long lasting. So we see a similar pattern could be emerging for crypto as well.
When you do identify a quality investment, it probably means you're not the only one who's identified that quality investment, and it can make it a bit expensive. So do you ever find that there is any such thing as a bargain?
That's another great question. Based on my experience with like the unicorns I invest, every round was expensive. There was not a round that was not expensive. The difference is that if the round was hotly sought after or not. I remember when we first invested in a firm back in 2018, people were not sure if a firm would be that differentiated from Afterpay, from Klarna, from Square. And when we first invested in Peloton, people thought it was just a hardware play. So over time, the company evolved and they execute on their strategy and show that they are more than what people thought they were, and ends up having differentiation that allow them to continue to partner and expand and show that they can continue to execute and outpace their competitor. And fundamentally, they are in markets that have a huge TAM and a huge SAM for them to expand to. And so if the growth is there, if you look back, the valuation that we pay to get in is not expensive because the growth took care of that. If not growing fast, it just looks expensive. But the lesson I learned is that whether it's a good deal or bad deal, most deals in tech are expensive. So it's not issue whether the price is reasonable. It's a matter of you pick the right team that can really deliver in a category that's growing fast.
Well, it seems you have picked many good teams. Hans Tong, thank you very much for your time today. GGV Capital Managing Partner there. You can actually catch more Bloomberg Wealth interviews at 7:40 a.m. Hong Kong time every Thursday. That's 6:40 p.m. here in New York. And we have that alert on Tesla. We have seen the after-hours trading send the stock higher after we heard that Elon Musk's Form 4 filing included him exercising 2.2 million options at $6.24. Also, the form showing he sold 934,091 shares on November 8th. Of course, this given that he does have some tax implications with some of the stock options that he received years ago. Right, we do have also breaking news out of Japan. We are getting the producer price numbers for the country rising 8% year on year. The estimate was for a 7% gain. When it comes to the month-on-month numbers, it's a 1.2% gain and really much higher than analysts' expectations of growth of only 0.4%. So we are now seeing this factory inflation being felt across Japan as well. Not surprising, given that we have seen a weaker yen really inflating those import prices. Commodity prices have also risen, pushing factory inflation higher, coming on the back of factory inflation being higher here in the U.S., in China coming in double digits. So really going along with a global trend of higher inflationary pressures, especially in the industrial side of things. Oh.
You can hear a lot more on that inflation story and much more besides on Bloomberg Radio. You can hear more from the day's big newsmakers as well and get in-depth analysis from the Daybreak team that's broadcasting live from our studio in Hong Kong. You can listen via the app, Radio Plus, or BloombergRadio.com. Plenty more to come. Stay with us.
As we watch Colin paint himself into a corner, seems like a great time to talk trading. Because it's as true with the markets as it is with anything. If you want to do big things, you need better tools. Trade up to IC Markets.
At a moment of unprecedented crisis, the world's leaders are convening in Singapore to define the challenges that face the global economy and to draft real solutions together. Leaders driven by a shared vision of a world in which dialogue creates trust, knowledge inspires action, facts build understanding, data reveals truth, and ideas launch solutions. Action is required. The Bloomberg New Economy Forum.
Quick check of the latest business flash headlines. Disney missed forecasts for streaming sign-ups in the fourth quarter as 2.1 million new customers joined up. The company wants 260 million subscribers by 2024 as it doubles down on the platform, but it hasn't yet hit the halfway point. It was a broadly disappointing quarter for Disney as profit fell across its film and TV businesses. Earnings were 37 cents a share for the period, and that was below estimates of 49 cents. China's crackdown on its tech industry is taking a heavy toll on Tencent, with tougher regulations weighing on its advertising and gaming businesses. The company's revenue rose 13% in the last quarter, and that is the slowest pace since it went public in 2004. Tencent says it's exploring new growth drivers, including in international games and the metaverse. Rivian soared as much as 53% in its trading debut before giving up some of that gain. The EV maker's market value briefly topped $100 billion, putting it on par with GM and topping that of Ford and rival Lucid. Listing is the biggest globally this year and the 6th largest ever on a U.S. exchange.
We spent years and years putting this together, and really what's so exciting is seeing such a diverse group of people with diverse backgrounds and interests really coming together to create these products. And standing there today looking out at the team as we rang the bell, it was quite emotional, seeing so many passionate faces. It was really powerful.
Take a look at markets trading in the early session across Asia. We are seeing Kiwi stocks rebounding from those losses that we saw in the previous session, up 0.1%. We had also declines for the Kiwi dollar against the U.S. dollar after the preliminary business confidence index weekend in New Zealand. We're also seeing the ASX 200 down 0.7%. This is being led lower by energy and tech. And this is not surprising given that we have seen energy prices under pressure after we saw those U.S. crude stockpiles unexpectedly increasing by 1 million barrels. Right now, rebounding slightly in the Asian session. Nikkei futures down 0.3%. This, of course, as we just got the producer price numbers, it was above expectations with growth of 8% year on year, really in line when it comes to the global inflationary picture, especially on the industrial side of things. U.S. futures unchanged after falling by the most in a month. Treasury yields here spiked higher, hot inflation reading boiling markets at the highest in about 30 years. Take a look at currencies right now because we do want to keep an eye on the Japanese yen. It's now trading within that 120 and 114 range. It snapped a 4-day winning streak, but still around that 1-month high. The Korean won fell the most in about a week, so we'll be watching trading as the market opens there. We had seen a little bit of pressure for the Aussie and the Kiwi as well. Paul?
Yeah, and those market opens in Seoul and Tokyo coming up in just a few minutes' time. And at the bottom of the next hour, we'll have unemployment numbers for Australia as well. Do stay with us for those market opens, though. This is Bloomberg.
As we watch Carol slowly change color, seems like a great time to talk trading. Because it's as true with the markets as it is with anything. If you want to do big things, you need better tools. Trade up to IC Markets.
Instead of working alone, don't we have a better chance of solving all the world's biggest challenges when we work together? At SABIC, we believe the chemistry between people is the chemistry that matters. SABIC.
At a moment of unprecedented crisis, the world's leaders are convening to define the challenges that face the global economy and to draft real solutions together. Action is required. The Bloomberg New Economy Forum.
Welcome to Daybreak Asia from Bloomberg's World Headquarters in New York. I'm Sherry Ann.
And I'm Paul Allen in Sydney. Asia's major markets have just opened for trade. Our top stories this hour: the hottest U.S. inflation in 30 years set to weigh on Asian risk appetite. Treasury yields soar across the curve on expectations of faster Fed rate hikes. Xi Jinping on the cusp of a mandate to rule for life, with a landmark historical resolution expected as a major summit wraps in Beijing. Plus, Alibaba's Singles Day is underway with subdued prospects. Beijing's tech crackdowns also hammering growth for Tencent.
Japan and South Korea coming online. Take a look at the Nikkei and the topics right now. They're under a little bit of pressure, mixed for the Nikkei, with tech and materials leading the declines. Industrials and utilities are higher, but not enough to pull the Nikkei into positive territory. This as we just got the producer price numbers with data coming in above expectations at 8% growth in PPI year on year. Not surprising given the commodity surge, the weaker yen, and really in line with the global inflationary picture. We're watching the Japanese yen because it's around that 1 month high, returning to a core 112 and 114 range in the last few days. We're also watching JGBs after that rise in U.S. yields. We actually saw the super long sectors bought in anticipation that there won't be an increase in debt supply for the next year. So we'll be watching any fiscal concerns in Japan as well. The Kospi right now down 0.8% after it has seen already the worst day in about a week. The Korean won also under pressure against the U.S. dollar. Not surprising because we've had dollar strength with treasury yields jumping across the curve. The Korean won also falling for a second session in about 3 days or so. Local importers purchasing the greenback right now. We are, of course, waiting for more data when it comes to Korea on the inflation as well as the unemployment numbers, Paul. And we do have, of course, the first 10 days trade numbers, Paul. We're just getting it as I speak right now. So let me just tell our viewers that the first 10 days of trade, the average exports jumping 14.1%. Chip exports taking a 45.3% jump. Imports also rising 59% year on year. So really, Paul, this showing a very strong trade picture for South Korea.
Yeah, some encouraging data there. We'll take a look at how we're doing in Australia. We've been trading for a little over an hour now, currently weaker by about 0.6%, about half of 1% now. It is very much a risk-off day after those inflation numbers we had out of the US. Best performing stocks on the ASX right now, no surprise, it's the gold miners, but it really is the energy stocks leading the way down. The worst performer at the moment, Ramsay Healthcare, saying that surgical restrictions and isolation orders from COVID restrictions have really weighed on their first quarter earnings there. We'll get a little bit more on that later as well, on the impact of restrictions here in Australia when we have unemployment numbers for the month of October. Those are due out at the bottom of the hour. Aussie dollar right now fairly steady, 73 cents against the US, and not much change there for the Kiwi dollar either. Kiwi stocks, though, in positive territory, Sherry.
Right, Paul, our next guest says that he's more concerned about the earnings than inflation. Let's discuss with Frank Benzimbra, head of Asia Equity Strategy at Societe Generale. Frank, what's the problem right now with the earnings outlook across Asia, and who will lead growth in the next few months?
Hi, good morning. So what we are seeing now on Asia earnings is you have in 2021 most of earnings growth which has come from Korea and Taiwan, and then you are going to see some change of leadership in 2022 to China. And looking at the consensus, what we see is that you have two sectors, China Internet and China Financial, which are expected to contribute to roughly half of the growth. And this is the question that we can have on earnings, is whether we can see China, which is slowing down on which monetary tightening is not over, whether we will see this kind of growth being delivered in 2022. So when we are looking at Asia outlook for 2022, well, of course, you have inflation in the background and how central banks are responding to the high U.S. inflation, but you also need to look at the dynamics of earnings in the region.
So when it comes to inflation and the monetary policy, what sort of policy are you expecting from central banks across Asia? Because, of course, they're so divergent and perhaps not really reflecting what's happening in advanced economies.
Yes, so the picture in Asia is very much one of divergence. We are seeing some policy normalization happening in Korea, in India, but we have this growth slowdown in China, with the PBOC expected to be more in some easing mode, and it means that there will be some consequence on the currency. how long are we going to see the strength in the Chinese currency? And this is one key element on the equity market. And also what it means in terms of the implication for markets. And looking at China equity, we are seeing a lot of hurdles, there is a lot of pessimism, but also we need to take into account the policy mix, which is probably going to go into more easing going forward.
We did hear numbers from Tencent after the close yesterday, revenue growth continuing to slow there in a tough regulatory environment. Is the worst almost over for Tencent and the Chinese tech industry more broadly?
Well, that's going to be an interesting weekend because we will have most major internet company in China reporting in the days to come. What we are seeing is, well, the margin has been under pressure, and this is something that could be more widely spread across the internet sector in China. In our own analysis, looking at the factors that the China internet companies are exposed to, they used to be very expensive one. And today they are not yet value, so the exposure to value is still negative, but we are seeing some better valuation. They are still exposed to growth, and this is something that is worth noting. And we are seeing some very negative momentum, but we could see this shifting over the coming weeks. And I think the trigger is really when we have the clear sign of the regulatory tightening ending. Maybe we get some indication with the sixth plenum, but this is still something on which there is very little visibility.
There's some very enticing opportunities in terms of price around Chinese real estate right now. Is that something you're looking at?
No, we are not looking at the real estate sector now from an equity perspective. At least, I think this is one sector on which we can see some value on it, but the momentum is still too negative to come back on it. On China, we remain pretty conservative when it comes to equity. So that means that we remain investing in the common prosperity theme. We invested in green technology, so on sector which tend to be richly valued, but on which we have a better visibility on the forthcoming earnings.
All right, Frank Ben-Zimmer, head of Asia Equity Strategy at Societe Generale. Thanks so much for joining us. Let's get to Bonnie Quinn now for a check of the first word headlines. Bonnie.
Oh, thank you. China and the US say they'll work together to slow global warming, issuing a statement jointly that